Hi, everybody. Mike here from Eagle Home Financial. Everybody with the market right now is saying that the refinances are dead. Well, maybe rate and term refinances are dead, but debt consolidation refinances are definitely not dead. And while a lot of people are turning to HELOCs, because a lot of times you can get a lower interest rate for a HELOC, cash out refinances on your house are also a great option to consolidate debt. And I'm going to show you what I mean. So let me share my screen here with you. And we'll go through some numbers just so that you can see exactly what I'm talking about. So now this is a real client. This is a client who came to Eagle Home Financial looking to consolidate some debt. They were looking at a possible they already have a home equity line of credit. They were looking to try to get some more, but they were also looking at what their different options are. And because they don't want the separate payment from their mortgage, they want to have one monthly payment. And so that's what we took a look at. And here's the scenario. So original purchase price was $425,000. The tax rate in the area of this house, they're paying $71.05 a year, and their mortgage insurance is $126 a month. They bought the house in 2005, and the estimated value today is $615,000. This estimate is not very relevant to what we're talking about, but that's just what it's being assessed at right now. The original loan amount was for $340,000 on a 30-year term. They have 23 years and something left on the actual current term. And it's a fixed rate mortgage at a 4.5% interest rate. The money or the balance they have remaining is $396,500, and their monthly payment is $1,723. All right, so that's their current mortgage setup, 4.5% interest rate from back in 2015. So I added in all of their monthly debts from their credit report here so that we could see what each monthly payment is and what the total balance due is. They currently have $91,000 in debt and are paying a total of $1,958 a month on these debts. So I'm going to scroll down a little bit here. This is not quite so relevant. Cash out refinance interest rate right now today is a 5.999%. This fluctuates like a stock, so don't quote me on this one. Can change as time goes on. Yeah, that is where it's at right now. So a 6.175 APR, which APR in mortgages is just adding in the cost for the mortgage into the interest rate, but it's not the interest rate. Interest rate 5.99% compared to a 4.5. So a rate and term refinance, of course, it doesn't make sense. Why would you go from a 4.5% interest rate to a 5.9% interest rate? Doesn't make any sense. Just keep making those payments the way that they are, right? Well, that's what most people think. Because if you look right here, here is their monthly payment, taxes and insurance, their installment loans, and the revolving loans, which is credit card debt. So they're paying $502 a month on credit cards and $1,456 a month on installment loans. And I'll go over those in just a minute. So by refinancing, they're actually spending $82 more a month, and they're going from a 23-year loan term to a 30-year loan term. So they're going to pay their monthly payments for 7 years more, and they're going to pay $82 more per month. Doesn't make sense, right? So let's start paying off some debt. So we'll start with the credit cards, the lower balances here. We'll add them on. Already one credit card paid off. This is $7,800, where they're paying $203 a month. Now they are spending $74 less a month than they currently are. Keep in mind, I'm well aware this says monthly savings, but in reality, it's just how much less they're spending per month on all of their bills combined, mortgage and their loans and their credit cards. Okay, so it's not actually savings, it's just that's what their payment is less per month. All right, so we're going to add on another one, as we add more and more of these credit cards on, now all the credit cards are completely paid off. They're going to spend $322 less a month than they currently are between all of their debts. Now we start adding on the big ones. So they've got a home equity line of credit that has a $35,000 balance on it with a $633 a month payment. Now that's added on there. They have another installment loan that has $27,000 on it, $694 a month payment. Now they're saving $1,270 a month, or they're spending $1,270 less per month on their bills. And we're going to add one more on. So now all of their debts are going to get wrapped into all of these monthly payments that they're currently making are all going to be consolidated into one monthly payment spread over 30 years. If I scroll back up here, you can see the difference. So now their mortgage payment is going from $1,723 a month to $2,358 a month. Property taxes and insurance stay the same, of course. Now their installment loan debt is gone, and their credit card debt is gone. So that's where the $1,323 a month is, right there. So now they're spending $3,076 total a month from all of their debts. Now, one cool, awesome way to look at this is, hey, you know what? Can you afford $4,400 a month? This client in particular? Well, they've been doing that already. What if they keep doing that? By which I mean, what if they do this refinance, but they keep spending $4,400 a month? That money, that $1,323 that they're saving every month, take that money and apply it towards the principal balance of their mortgage. Let's see what happens. So if I scroll down a little bit more here, we're going to see that $1,323 a month applied towards the principal balance takes their 30-year loan term down to 12 years and 10 months, and they will have an increased net worth of $168,759 by doing a debt consolidation refinance. It is an absolute no-brainer. You keep making the exact same payments you're currently making right now. They're taking 11 years off of their current mortgage payment, whatever they owe left on their current mortgage. And at the end of the day, they're going to have $168,000 more in their pocket that they can use for whatever they want. And most people are going to use it towards retirement. You could use it towards your next home. You could use it for anything you want, but that's free money that's sitting there. So this is a scenario where we're taking a lower interest rate, getting a higher interest rate, but saving because we are consolidating debt and being smart with the money that we're saving and applying it towards the principal. One other thing I wanted to go over with you real quick, if you're not in a situation where you have a lot of debt, can you afford a little bit more towards your principal payment every month? A lot of people are in this boat, especially if you got a mortgage in the last 3 years or so. Here's one example that came up: $250,000 left on your mortgage right now, and with a 3.25% interest rate over a 30-year period. That's 12 payments a year. So right now, that's a total of total interest $141,685 you'll spend on top of the principal balance on the mortgage. So what happens if, say, you can apply an extra $200 a month towards your mortgage payment? We can add that in right here, $200, add it in, boom. 100, now all of a sudden this went from 141,000 to 105,000 of total interest that you pay. So $35,000 less that you're going to save just on interest. And now there's only 276 payments remaining. That's 23 years. So just by applying $200 towards the principal balance every single month. Now remember, every dollar that you put towards principal every month doesn't have interest on it because you're applying it directly towards the principal. So you're saving all of that money in interest, and you're taking 7 years off of your mortgage payment. So automatically go from a 30-year term to 23 years left of payments to make. So that's a couple different. So I just gave you two different options: the debt consolidation, or if you don't need the debt consolidation, you've got this option to apply a little bit more towards your principal. So if you want this, actually, you could Google this spreadsheet. It's called a loan amortization schedule, or just DM me. I'll send it over to you. I've got a copy of it here I can send to you. So a couple of ways to save some money. If you have any questions, you have a different scenario you want me to run through, please don't hesitate. DM me, shoot me an email, shoot me a text, give me a call. I'm here. I'm ready to help. And